My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people are my friends. I'm just trying to save you some money. My job is not just to entertain, but put tough days like this in context. So call me, 1-800-743-CNBC, or tweet me at Jim Cramer. Look, there's nothing like a good banking crisis to bring this whole market to its knees. Doesn't matter how big or how small, or even if it's already been widely predicted when it comes to fruition. Everyone's shocked, and the market gets clocked. And that's why the Dow tumbled 345 points today. S&P plunged 1.58%, and the Nasdaq plummeted 1.98%, despite a parade of terrific earnings away from this financial morass. No matter. Last night, First Republic, the San Francisco bank that looks a lot like the failed Silicon Valley Bank, reported one of the ugliest quarters I've ever seen. Then followed up with a conference call so dispiriting, management didn't even bother to take any questions. After CEO Michael Ruffler closed by saying, quote, "We are grateful for the continued support and thank everyone for joining today's call," end quote, the operator broke in. "This concludes today's call and thank you for participation. You may now disconnect." Huh? You just announced that you lost more than half of your deposits, the kind of run no bank has ever survived? You tell us you've borrowed billions from other banks in order to stabilize things and that money, it might be vaporized, but then you don't take any questions? Believe me, we aren't supporting. We are collectively disconnecting. Maybe it's because I just came back from Dallas, where Jerry Jones, the owner of the Cowboys, talked about the greatness of Don Meredith. Dandy Don, the legendary Monday Night Football announcer. I found myself singing, "Turn out the lights." The party's over. Yep, there's no coming back from that glib, from those huge losses and the anomalous "thank you for your support." I mean, that's the kind of oblivious repartee that I haven't heard since the collapse of the most egregious subprime entities during the financial crisis. However, there's one big difference between now and 2008. This time, there is no systemic contagion. Now, I know that seems hard to believe, but there isn't. It's a miserable moment for First Republic, once a bank beloved by the rich and famous. But it's an all-clear event for everyone else. You see, these guys were supposed to use the tens of billions of dollars in deposits they got from other banks to buy time to restructure. Maybe lure in a deep-pocketed savior. Maybe get a lifeline from someone who's coveted what's left of their well-heeled deposit base. Maybe sell off parts of their bank and go to the FDIC for help. Maybe find some Warren Buffett, a new Warren Buffett, any Warren Buffett. But from the looks of things, they passed on the moment of largesse, the kindness of stranger banks. I couldn't figure out if it was hubris or stupidity or maybe both. In the end, it didn't matter, though. Everyone thought the March mini-banking crisis was over, so there's no way the market could handle the implications of First Republic's most likely collapse. So people sold the good with the bad today. It was an amazing session because the vast majority of companies that reported put up really good numbers. And if not for First Republic, their stocks would have been roaring. I'm sure many a CEO went home very confused tonight. I mean, this was an impact of a quarter derailed because of First Republic. I think it's important to put First Republic in some sort of, let's put it in context. If you go back to the original crisis when Silicon Valley Bank practically vanished overnight, First Republic faced a very similar financial bind. Everybody assumed that they would be the next to go under. But these guys got this lifeline in the form of $30 billion worth of deposits from a posse of major banks that wanted to stem the bleeding. They didn't want any more bank failures. It's just too brutal for the whole industry. Turns out that the lifeline, though, wasn't enough because there was no reason to stay as a customer of First Republic if you didn't want to. They couldn't lock those people up, and they're the ones who mattered. Sure, the bank was known for its quality service, its willingness to loan against hard-to-value items, unfortunately, like pre-IPO stock. But that didn't keep the depositors from running. Rich people don't want to risk losing their uninsured deposits in a bank run. No amount of white glove treatment can change that, even as they do love the attention and adoration. You just, well, sadly for First Republic, you can't take that to the bank. Still, earlier this morning, we had a mostly positive parade of earnings, and I don't want to dismiss that. I couldn't believe how good PepsiCo was. General Electric, amazing. Raytheon showed us that aerospace is on fire. McDonald's, it blew away the numbers and the same-store projections. Gigantic health insurer Centene executed beautifully, lifting a group that had been quite soggy of late. Pulte Homes, amazing quarter, much better than the numbers they were putting up when interest rates were much lower. Even they seemed astounded by the level of demand for new homes. You got a genuine housing crisis in this country with a shortage. We don't have a lot of sellers because they lose their low-interest mortgages if they did. And the home builders don't have the zoning laws going their way. They hinder development around the country, which pushes prices higher. We need millions of new homes to meet the real demand out there. Totally counterintuitive that we could have a bull market in housing when the Fed's hitting us with a string of aggressive rate hikes, huh? But it's staring us right in the face. Unfortunately, it also hurts because higher housing prices also mean higher rents. Fed's desperate to lower the cost of rent. They also want to push back against the higher wages that so many companies need to pay in order to keep their operations going, and I heard that all day. As long as we have wage inflation and house inflation, Fed's going to keep tightening. I didn't hear anything in the last 24 hours that would stay the Fed's hand at a quarter point, except for one thing, and that was First Republic. See, when you get a sizable bank out there flailing, it is a reminder that we could have a powerful counterintuitive force to all the inflation I just mentioned, the deflationary anvil of a bank failure. The Fed can basically let struggling regional banks do the work for them, cutting back on lending to anyone and everyone because they desperately need cash. So instead of hearing a host of companies saying there's no slowdown, business is terrific, but there's inflation, all we heard was the possibility of a chain reaction from a now pretty small San Francisco bank losing its lifeline. Now, I caution that in March, we thought the Fed was done tightening when Silicon Valley Bank collapsed, and then the economy just started roaring again like a fire that refuses to die. I doubt the crisis at First Republic can douse the darn thing again. It's just not big enough. Only a severe slowdown in lending across the country from regional banks might keep companies from expanding instead of contracting, the way 3M did today when it laid off 6,000 people. But that was one of the few mass pink slips out there. Let's just say if the party's really over at First Republic, you'll see some very big companies report some excellent numbers away from them. And Wall Street might yawn at those, but you can't. You should be thinking about buying. We just got some tremendous results today for the close. Alphabet had a top-line beat and a huge beat bottom, with better than expected profitability in every segment, especially its cloud business. I mean, that had been a huge loser. Microsoft looked really good. At top-line growth accelerated back into the double digits thanks to sales that beats in all segments. Remember, though, with Microsoft, you have to be careful because we don't have the complete forecast, and that's what matters. But how about this? How about Chipotle? Chipotle's screaming higher in after-hours trading thanks to a blowout that included better than expected 10% comps. Only 9 was really we were looking for, and more than $10 in earnings per share. Less than 9 was expected. I've been telling you this stock's headed for $2,000. How many nights out here? Well, we're a heck of a lot closer, and I think we're going to get there. Well, all 3 stocks jumped in after-hours trading. It might not matter, though, to tomorrow's action, given the obsessive focus on this broken darn thing. Bottom line, as we know from March, this too shall pass. And if you bought when it passed last time, well, guess what? You made a ton of money. Carrie in Texas. Carrie.
Hi, Jim. Hope
Carrie,
you enjoyed your visit to Texas. Well, I hope you enjoyed your visit to Texas. I live in the Frisco area where you were.
Oh, my. Frisco's gorgeous. I went to the little town beside from Jerry World, and I loved it, too. How can I help you?
Well, I'm needing to diversify my personal portfolio some, and Costco is my go-to retail stock. However, the case for Foot Locker is strong as well. With brick-and-mortar retailers like Bed Bath & Beyond cratering, it makes me even more cautious to branch out, though. I'd love to know your thoughts on growing a position in Costco versus Foot Locker.
Okay, Costco's best in show. There's no doubt about that. So I'm always going to say buy Costco. My basis for liking Foot Locker for the charitable trust is Mary Dillon. It's a bet on Mary Dillon. So it's the company Costco, the person Mary Dillon. You have to go with Costco, the institution, but Mary Dillon is going to make this one big. Let's go to Fest Tim in Connecticut. Fest Tim.
Hey, how you doing, Jim?
Not bad. How about you?
Good. So I was wondering about Elf Beauty and where that's heading.
Elf Beauty is sensational. There's just no doubt about it. The fact that when this stock goes down, Tarang Amin has been a friend of the show forever when the stock was in the teens, and I'm not backing away. If you can get that under 90, it would really be terrific. How about Olani in Hawaii? Olani.
Aloha, Jim from Hawaii. Love you drinking that spam juice and squawk on the street with Carl and David.
Well,
That's great.
that spam juice worked well for me when I lived in my car. I don't know, I've kind of upgraded my game since then, but I appreciate the recollection. How can I help?
Given Wells Fargo's earning, is it a buy here? And then what's your thoughts on that $5 billion infusion to First Republic? Mahalo nui loa.
Well, I'll tell you, yes, I'm talking to my Ohana here. Okay, so here's the deal with the Wells Fargo. They had an amazing quarter. They have the capital. I believe there's going to be a haircut. They're going to get a lot of that money back. I ultimately believe that, but I understand that if a big bank goes down like this, you're not going to be able to get your whole $5 billion back unless the Treasury guarantees it. And I haven't heard them do that yet. Let's go to Brendan in Michigan. Brendan.
Booyah, Jimbo. How's it going?
Oh, man, it's a long, darn day. How about you?
Doing well, my friend. Hey, my girlfriend and I are fresh out of college. She just started at the hospital as a nurse. She came home with 5 or 6 pairs of these fig scrubs. She loves them. What's your take on the stock?
Well, I think the problem here is that it's got to start making a lot of money. It's kind of breaking even. And until it does that, this apparel business, as much as you're absolutely right, you're right to look at how they're doing in one-on-one, anecdotally. Together, empirically, it's just not doing well enough. But it's certainly a good spec because it has found a way to make money, and it does matter. All right, as we know from March, this too shall pass. Because we know that if you bought like high-quality companies, like maybe Microsoft, like maybe Alphabet, and didn't just walk away last time, you made very good money. On Mad Tonight, after cruising higher after earnings, Whirlpool found itself in the doghouse today. Hey, what's behind the stock's follow action? Not easy to figure out, so let's talk to the CEO. And Palo Alto Networks can help defend your enterprise from cyber threats, but can it help defend your portfolio? We need to take a step back and learn about the larger issue of artificial intelligence and your security. Don't miss my exclusive for the company's top brass. Yesterday, we had a chance to sit down with Cowboys owner Jerry Jones, and there was too much to talk about when it comes to leadership and business for me not to put it on tonight. So we're airing the second part of our interview with the Texas and American legend. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.